What is a virtual digital asset? Virtual digital asset can be a code or a number or even a token which would have been generated using cryptographic mechanism. So it can be a virtual code, or it can be a number, or it can be a non-fungible token. So this is generated, and then this is given with a promise that it holds certain value, and even people can exchange these virtual digital assets for the purpose of gain, or even hold it as an investment. So recently, from the financial year 22-23, Indian government has introduced a tax mechanism to tax the trades and investments which happen in case of virtual digital assets. So let's have a deep look at that. So at the top level, a virtual digital asset is chargeable under Income Tax Act under the head capital gains if the virtual digital asset, or VDA, is held for investment purpose. At the same time, it's also taxable in case if people have been trading on that and there is a business income, even that's also taxable. So either in the case of an investment or in terms of trading, it's a flat tax rate of 30% under Section 115 BBH from fiscal year 22-23. So before we really go into what is virtual digital asset, one deep note that there are few things which are digital in nature. For example, if there is a gift card given to a friend, or if you're using a gift card as a part of getting a discount on an e-commerce website, or let's say that there is a voucher which you are using to get a discount on it. For example, if you're purchasing a mobile phone on an e-commerce website. So gift cards and vouchers, they are not digital assets. And there are mileage points or even reward points or a loyalty points which are awarded when people travel on the flight journeys. So these points can be redeemed against when they purchase subsequent tickets, or maybe doing some transactions on their websites. For example, loyalty points or reward points can be used in such a fashion. Or if there were subscriptions to the websites or platforms, so all of them are not part of virtual digital asset. So they were exempted. So how do you compute the income of a virtual digital asset sale? So here, this sale transaction, we have only one possibility, which is considering the cost of acquisition. So here, the cost of acquisition is allowed without indexation. But for example, other expenditures like improvement expenses or expenses in case of transfers, they are not allowed to be discounted or deducted from the gains. And most important points to remember here is that in case there is a loss on the transfer of a virtual digital asset, you cannot adjust that with any other income. And if there was any loss in terms of activities within the virtual digital assets sale transactions, so there is no adjustment of that income with any other source. And we can't even carry forward the loss on the transfer of virtual digital asset. So these are completely not allowed. So the only thing which can happen is that from the sale proceeds, you can deduct the cost of acquisition, and the profit in such a case is taxed. So we will have another deep dive video which I would explain about different questions and then different scenarios, how virtual digital assets like cryptocurrency is held for an investment or even traded. And for example, if there were cases like salary being received in the form of cryptocurrency, then how that is treated. I'll have a subsequent deep dive video on that. Do watch it. Thank you.